Hello students, let us start today's session. In today's session, we are going to study a new study note which is your leasing chapter. Leasing is your study note number 3. Now in this study note, basically there are around 9 to 10 questions given in your CMA module. We are going to focus on those questions. Each question is different from the other question. So basically there are 9 to 10 cases which you are going to focus on. Now what is leasing? What is leasing? Suppose you are running a company and you need an equipment, or suppose let's say asset you need, or plant and machinery you need some machine. Your requirement is some equipment or machinery. Now as a company owner you have two options. First option you have that you can go and borrow money and purchase the equipment. First option is borrow money and purchase equipment. Now in this option, when you borrow money and purchase the equipment, since you are purchasing, you are the owner, you are purchasing the equipment, you become the owner of equipment. And as an owner of equipment, you will be having certain inflows and outflows. In this option, we will discuss what are the various inflows and outflows you will have if you borrow money and then go and purchase an equipment. There is one more option. Suppose you are not very much certain that whether this equipment will be beneficial for the organization or not, but you still want to have that equipment. Now it is not beneficial for you to go and purchase the equipment. There is another option that you can take the equipment on lease. Take the equipment on lease. Enter into a lease agreement. Take the equipment on lease. In that situation, you will not become the owner, of equipment. Basically, you are taking the equipment on rent and you have to pay only lease rentals. Lease rentals periodically you have to pay till the time this lease agreement is entered into. Lease agreement can be entered to for 5 years, 3 years, 4 years, depending upon the terms and conditions. And for those many years, you have to pay the lease rental to use the equipment. Now, you are not going to become the owner of the equipment. You will not be the owner of the equipment. You will be only allowed to use the equipment. So, first of all, you are not the owner. Since you are not the owner, many benefits which accrue to an owner will not be yours. One of the benefit is owner can claim depreciation. But in the lease agreement, since you have taken the machine on lease, you are not the owner, you cannot claim depreciation. Cannot claim depreciation. So basically in this chapter, you have to compare these two options. Basically, you have to compare whether you should borrow money and then purchase the asset and become the owner, or you should take the machine on lease. Now, these are the two options, right? So you have to compare. There are two issues in this comparison. First of all, inflows and outflows does not happen in zero period, does not happen at the moment. It occurs in future. Inflows, outflows occurs in future. So all the inflows, outflows have to be, first of all, calculate their present value so that we can compare both the options. It may be a possibility that under option 1, some inflows or some outflows happen in second year, third year, fourth year, and similarly in option 2, some inflows or outflows happen in third, fourth, fifth, sixth year. So we cannot compare both the options because inflows and outflows are happening at different point of time. So best you can do is that calculate the present value of all inflows, outflows, so that when you compare both the option, present value is already computed. So basically we are going to compute the net present value of this option and net present value of this option. First step. Second step is, what are basically the inflows and outflows that happen under this option and this option? Let us observe. Suppose you borrow the money and you purchase the equipment. Okay, so you become the owner. So if we evaluate the first option, since you are borrowing money, debt, right? So in this case, you have to pay interest. Interest payments will be done periodically. Now interest payments is an outflow, so it will be like outflow periodically every year or every semi-annually, whatever the question states. So this is an outflow, but interest payment is an expense which can be shown in profit and loss account. And expense is a beautiful thing, because when you show an expense in a profit and loss account, then your profit gets reduced and you save tax on it. So if suppose, for example, let us say interest payment is 10 rupees and you show this is an outflow. But if you look into this is not the effective outflow. Suppose tax rate is 40%. So due to the borrowing of money, you are able to show the interest cost in P&L as an expense. So your profit will be reduced by 10 rupees. Profit reduced by 10 rupees. If profit was not reduced, then on 10 rupees of profit, you must be paying tax. How much tax was outflow? Tax payment kitna? How much tax payment would have been there? 40%. 4 rupees. Now this 4 rupees you have saved because your profit has reduced by 10 rupees. Because you have showed interest as an expense in profit and loss. If interest was not shown as an expense, your profit of 10 rupees would have the tax would have been charged on that profit at the rate of 40%. So 4 rupees of tax you would have paid. Now you have saved this 4 rupees on tax outflow, right? So basically, if you observe now, your outflow is the interest cost. So interest cost is an outflow. But because of interest, you save tax, and saving of tax payment is an inflow. You have saved, we will call this as tax shield. So effectively your outflow will be less. Effectively outflow will be less. Now when we are going to compare, when we are going to compare in the question that whether it is beneficial to borrow money and purchase the equipment or directly lease the equipment, then in this comparison we have to see the inflows and outflows under both the options. So in the first option, option 1, first of all, when you borrow money, every year, every periodically you have to make the interest payment. So it's an outflow that you have to consider, but you save tax on it because on every expense you save tax, so you get a tax shield. So effectively, how much is the outflow that we have to show calculations. So this is going to be one of the calculations that we are going to learn and study. Then second calculation is that since you are the owner of the machine in this case, you can claim depreciation. Now depreciation itself is not any outflow. Depreciation is a non-cash item, right? But depreciation is a non-cash item, but depreciation is an expense. An expense, I told you, is a beautiful thing because you can show it in the P&L account, and when you show as an expense in P&L account, depreciation you will show, your profit is going to get reduced, and since profit is going to reduce, you will save tax. So save tax, that means you get tax shield on depreciation expense, which is indirectly an inflow, otherwise tax would be an outflow. If there was no depreciation, then you would be paying more tax because more profit will be there. Since you are claiming depreciation, you are charging depreciation to your P&L account, your profit is getting reduced, and on reduced amount you are paying tax, so you are saving tax, otherwise tax would have been paid more. So whatever tax you save because of depreciation, that is called tax shield, and it is treated as an inflow. Any kind of savings will be treated as inflow. But depreciation, remember always, depreciation itself is a non-cash item. There is no outflow because of depreciation, but depreciation can give you an inflow in the form of tax shield. So this is again one calculation that we are going to do. Then the third focus, I'm just trying to tell you the focus areas. Then once we start doing the questions, you will be able to understand much better. Now the third area that we are going to focus is that this machine belongs to you, because in the first option you are the owner of the machine. Now when the last year of the machine comes, when the machine will become a scrap in the last year will be called as terminal year. In the terminal year, since you are the owner, you can sell the machine. Now when you will sell the machine, you will be having an inflow, and at the same time there will be gain or loss because of sale of machine, and that gain or loss you will have to if there is a gain, you have to pay tax on that gain, capital gain tax, or if there is a loss, then you will be able to set off that loss and reduce your profit and save tax on it. So there will be either tax payment, or either there will be tax shield you will get on loss of sale of asset. So these are also the inflows and outflows that we have to consider while studying this chapter. So these are the three main areas when you will be evaluating option 1, if you are going to borrow machine and purchase machine. In that scenario you have to see what is the interest payment. And one more thing, when you borrow the money, there is an inflow, but at the same time you are going to buy machine, so it's going to be an outflow also. So that is why I have not talked about borrowing amount. Okay, so when you borrow machine, you pay interest. When you borrow money, you pay interest, that is an outflow, but you save tax on it, that is a tax shield. So any kind of expense should highlight the tax shield part. Then there is a depreciation that you can claim. And then the last year, terminal year, since you are the owner, you can sell the machine. So there is going to be inflow because of the sales consideration. But since there can be a capital gain or capital loss on sale of machine, accordingly tax payment can be there or tax shield can be there. Then the second option. The second option is you take the machine on the lease. Now what happens when you take the machine on lease? There are two parties involved, option number 2. When you are going to evaluate lease option, then there are two parties involved. One is lessor and another is lessee. The person who gives you machine on lease is called lessor, and the party who receives the machine on lease, who uses the machine on lease, is called lessee. The person who takes the machine on lessee is not the owner of machine, but he can use the machine, and in return he has to pay lease rentals periodically, and some down payment can also be there. So lease rental you have to pay periodically. You are not the owner. This is very important. You are not the owner. Lessor is the owner. Now when you are going to evaluate the lease option from the point of view of the lessee, there will be some questions where you have to evaluate the lease option from the point of view of lessor, but currently in the beginning you are going to evaluate the option from the angle of lessee, because lessee is the one who is thinking, should I buy the machine, borrow money and buy the machine, or should I take the machine on lease? So lessee is going to take the machine on lease. Lessee's inflows, outflows will be what? Lessee's first outflow will be lease rentals. or any down payment. This is going to be outflow. But lease rentals are basically as an expense which will be shown in profit and loss. And now I have just told you, when an expense is shown in profit and loss account, it is a beautiful thing because you save tax on it. And tax shield has to be considered. Tax shield on lease rentals is to be considered. That will be an inflow. So effectively there will be less outflow. Supposingly there is 10 rupees of lease rental that you have to pay, but there is a 4 rupees of tax saving. So effectively your outflow is only 6 rupees. So that you have to show what is the effective outflow. Now the second part is, will lessee be able to show depreciation in P&L account? Answer is no. Depreciation can be only claimed by owner, not by lessee. So lessee's depreciation claim cannot be taken into consideration. So there will be no tax shield because of depreciation. Is there any interest payment? No, because you have not borrowed any money. So only this will be the inflow outflow. And the last thing, will lessee be able to sell the machine in the terminal year last year? Answer is no, because he is not the owner. In the last year, when the lease agreement finishes, the machine will be returned back to the lessor. So basically lessee does not have to will not be able to sell the machine. There is no inflow outflow in that regard. Depreciation cannot be claimed. Interest payments are not there. Only lease rentals will be given to you. Now basically when we are going to solve these questions, predominantly we are going to use which method? NPV. NPV is nothing, basically we are going to bring all the inflows outflows, because inflows outflows are occurring at various different point of time. We are going to bring all the inflows outflows at 0 period. That is, we are going to calculate the present value of all the inflows outflows. Once present value is calculated of both the options, how much present value of inflow outflow, whatever the situation is, then we will see in which option less outflow is going. Whichever option the outflow is less, that option is going to be better for us, and then we will decide upon it. So basically in the leasing chapter, this is the primarily main type of question, comparing the two options, that is to borrow money and purchase the equipment or take the machine on lease. Now whatever we have studied just now theoretically, let us start doing questions, and you will be able to understand what is this tax shield, what is this interest payment, what is this depreciation treatment, so called. So let us start with question number 1. Please see question number 1. Question number 1 is, your company is considering to acquire an additional computer to supplement its timeshare computer services to its client. So basically your company is considering to get an additional computer, because your business is to supplement its timeshare computer service to its clients. So basically your clients come and they use your computer services. So for that you need an additional computer. What is the purpose? We are not concerned with that. We just know that we need a computer. Now how the company will get the computer? It has two options. To purchase the computer for 22 lakh, okay, or to lease the computer for 3 years from a leasing company. Either you can purchase yourself or you can take the computer on lease from a leasing company. For how many years? 3 years. This is very important. For 5 lakh as annual lease rent, okay, so we have to make annual lease rent payment. How much? 5 lakh per annum, annual lease rent 5 lakh, plus another payment has to be made to leasing company, plus 10% of gross timeshare service revenue. Whatever our revenue will be, from that revenue 10% is also to be paid to the leasing company. See, leasing agreement is between lessor and lessee. There is generally lease rentals are to be paid, but in this agreement, beside lease rentals 5 lakh per annum, there is a revenue sharing also being done. Okay, so basically lease rental we have to pay 5 lakh. Whatever we are going to earn, 10% revenues to be paid. Then further, the agreement also requires an additional payment of 6 lakh at the end of third year. And at the end of the lease agreement, 6 lakh is also to be paid to lessor. Lease rents are payable at the year end. That is, lease rent 5 lakh rupees is to be paid at the initial of the year or at the end of the period, end of the year. And computer reverts to the lesser after the contract period. And the computer will go back to the lesser party after the contract is over. So for 3 years, you can use the computer, and basically what will be the outflow? Lease rental 5 lakh, then the revenue sharing of 10%, and at the end of third year, 6 lakh rupees is to be paid. Okay. The company estimates the computer under review will be worth 10 lakh at the end of the third year. At the end of the third year, that is the terminal year, when the whole story ends, third year, the terminal year, the value of computer which we are talking about in review will be worth 10 lakh. So basically they're trying to tell you the salvage value, the scrap value of the computer at the end, 10 lakh. Okay. Now what information else is given? Forecast revenue are. So after we get the computer, either we purchase it or we take it on lease. These are the forecasts we have. Year 1, 2, 3. Now this is a revenue forecast. We will earn this much of revenue. Why revenue forecast is given? Because we have to share our revenue with the lesser if we consider the leasing option. Okay, annual operating cost excluding depreciation and lease rent of computer are estimated to be 9 lakh with additional 1 lakh for startup and training cost at the beginning of first year. These costs are to be borne by lessee. Now please understand, whatever I have just read is waste of information, because whether I take the machine on, whether I purchase the machine or I take it on lease, machine will come to me. And in order to run the machine, these are the costs. So whether I borrow them, whether I purchase the machine or I take it on lease, it doesn't make any difference in both the situations. In both the situations, I have to operate the machine. So I have to incur 9 lakh of operating cost, 1 lakh of startup cost, training cost. Basically, this is a running cost of the machine. It will not affect my decision whether I should purchase the machine or take the machine on lease. Any cost which is in under the both the options are same, we should not consider it is an irrelevant cost for making decision. When any cost, please listen to me carefully, when any cost is same under both the options, we do not consider it, because we are not making profit and loss account. We are trying to take a decision which option is better. So it does not affect our decision whether we take this decision or this decision. This cost is going to remain same. So we ignore this cost. Ignoring means that it is irrelevant for our decision making. Now you will notice while solving these 3 study notes, one of the favorite word will be relevant cost and irrelevant cost. Relevant and irrelevant cost, you will understand slowly as the question goes on, and it will be taught properly in detail in study note number 1. So coming back to our question, what is written? Your company will borrow at, this is very important line, focus please. Your company will borrow at 16% of interest to finance the acquisition of computer. That is, if you want to acquire the computer, you want to purchase the computer, then you have to borrow the money at the interest rate of 16%. Basically, the capital will be funded by debt at the rate of 16%. Okay, so basically there are 2 options. Either first option is we borrow money at 16% interest of rate and then we purchase the machine. And second option is we take the machine on lease. Okay. Repayments to be made according to the following schedules. Now, if we borrow the money, then how repayments are to be done? Principal amount will be paid 500, 850 thousands, the figures are in, and 850 thousands principal, and interest is to be paid every year like this. The company uses straight line method to depreciate the asset. Okay. And it pays 50% tax on income. Okay, tax rate is given. Management approaches you to advise which alternative would be recommended and why. So we have 2 alternatives and we have to advise whether we should borrow money at 16% and purchase the machine, or we should go for the leasing option. Obviously that option is better, in which our outflow is less. Okay. So present value factor at 8% and 16% rates of discounts are given to us for first year, second year, third year. This we can also calculate on computer. Sorry. So question is complete. Now let us solve this question. I have already written the given information. Now option 1 is your borrow and purchase option, where interest rate for borrowing is 16%, depreciation SLM have to be used, and machine salvage value at the end of third year is 10 lakh rupees. And under option 2, lease option, under lease option, lease rentals are to be paid at 5 lakh per annum, which is to be paid at the year end. Every year end we have to pay the 5 lakh plus 10% revenues to be shared every year. And then the last, when the lease agreement will finish, at that time 6 lakh rupees is also to be paid under lease agreement, that we have learned from the question. Tax rate given in the question is 10%. Using this information, let us evaluate first option number 1, that is borrowing and purchasing. Now before starting this option computation, we need to focus on this word, cost of capital. Now what is cost of capital? We are going to borrow money at the rate of 16%, right? This is very important, please understand. Suppose, for example, company borrows capital 1 lakh rupees at the rate of 16%. This is an example, okay? At the rate of 16%, and inflows first year, second year, third year will be 40,000, 40,000. Now please understand, in our when I started teaching the basic concepts, I told you that this 1 lakh is our this 1 lakh we have raised at the rate of 16%. Now I am going to invest this 1 lakh in a project which will give me inflows in future. How much? 40,000, 40,000, 40,000 per annum. This is not part of question number 1. This is just an example to explain you one very important concept related to cost of capital. Okay. So basically I am trying to say is that a company has borrowed 1 lakh of capital at the rate of 16%, and if I invest this 1 lakh in this project, whatever the project name is, I will be getting 40,000, 40,000, 40,000 of return. Should I invest in this project or not? That is my question. I should only invest in this project if I get that much of return which I have to pay to my capital providers. My capital providers are charging returns from me. My capital providers want how much return from me? 16%. So if I have to pay to them 16%, at least I should earn 16% on this money. So I will check this project from the point of view of 16%. No, this is incorrect. My capital providers want return how much? 16%. But see, capital providers or investors, whatever name you call them, investors, they want return of how much? 16%. Return on capital, they want 16%. But my cost of capital is not 16%, is not 16%. They will get 16%, but my cost is less. Why? On 1 lakh, if I pay them 16%, how much is 16% on 1 lakh? 1 lakh, 16%, 16,000 rupees. So I need to pay them interest of how much? 16,000 rupees every year. This is the return they will get, but this is the interest cost. Now this interest cost I will show in my P&L account. Interest cost 16,000. Automatically my profit will get reduced by 16,000 rupees. Profit will get reduced by 16,000 rupees. I will be able to save tax on it. If I would not have raised capital, then 16,000 interest cost I would not be able to show in my P&L account. Since I have raised money, I am paying interest to my capital providers. I am showing this 16,000 in my P&L. My profit get reduced by 16,000, and I am able to save tax on that 16,000. On 16,000, the tax rate is 50%. So I will be able to save tax how much? 8,000. If interest cost was not there in picture, 8,000 tax would be going. Now I am able to save tax, saving on tax. So basically, effectively, if you see, if my outflow is 16,000, then because of my outflow of 16,000, I'm able to save tax of 8,000. So effectively, my cost is only 8,000 rupees. Hence, if you check now, 8,000 is my cost of capital on 1 lakh rupees of capital. So effectively, my interest cost is only 8%. My capital providers are earning 16% from me, but I am bearing only 8% cost. This concept you must have studied at inter level, cost of debt, where whatever the debt payments are there, whatever the cost of debt is there, that is taken after into consideration the tax impact. So basically, effectively, if you see, this is just an understanding, dear students. So basically, the capital providers are giving me money at the rate of 16%, but my cost of capital is not 16%. It is 16% 1 minus tax rate. That is 16% minus 16% into 50%, the tax rate, right? So if I write like this, this is the formula. So basically, effectively, my cost of capital is 8%. So now, wherever I will invest my money, I do not want to earn 16%. I want to earn effectively 8% after giving due consideration to all tax saving, tax payments. I need to earn on my 1 lakh not 16%, 8% only, because I am bearing cost only 8%. So this one thing you have to you must remember, whenever the borrowing cost is given, always step number 1, always do this calculation. So this is my step number 1. What did I compute? Effective cost of capital. How do we do that? We have been given the borrowing cost, and borrowing cost is 16%, but that is not the effective cost. We have raised money at 16%, but effectively we are just paying 8% because of the tax saving. So this thing you will not forget. Okay, now let us start. Now the question is very smooth question. So basically, this formula you will not forget. Whatever your borrowing cost is, that borrowing cost is given into 1 minus tax rate. So basically, I want to earn from the whole project 8% only. This is my cost of capital. This is my effective cost of capital. Okay, now let us evaluation of. Let's do the evaluation on the next page so that I get the full. I will do the working notes on this page, and on the next sheet I am starting my evaluation. So first I will do evaluation of borrow and purchase option. How we are going to solve this question? I have not taught you anything. I just want to know what are the inflows, outflows under option 1. In this question, total evaluation is for 3 years. So after 3 years, machine will be also sold. So we are going to do calculation for 3 years. So I am preparing 3 columns. Now this is for year 1, year 2 and year 3. Now under this question, borrow option, what you are going to be the owner because you have purchased the machine. Now you are the owner. Okay, you have purchased the machine, you have borrowed the money. Now if you see in the question, what are the outflows? If you see in the question, what is the outflow? Primarily, when you borrow the machine, primarily you have to pay the principal amount and the interest. Repayments to be made according to following schedule. You have to pay the principal, you have to pay the interest. This is what is the biggest outflow when you borrow the money and purchase the machine. Okay. So let me write every year what is the outflow. Every year the installments, what installments payment will go? Installment payments will go. Principal will go. Principal amount will go. How much is the principal given in the question? In the question it is given 5 lakh first year. Second year it is given 8 lakh 50,000. I am writing it from the question itself. 8 lakh 50,000. every year, right? Then what is the interest which is going to be the outflow on my borrowed amount? It is given the question 352,000, then 272,000, and then 136,000. This is my outflow. Okay. Now what is the total of this whole in installments payment? If I add this, this is coming out to be 8,52,000. This is coming out to be, if I add, 11,22,000, and this is coming out to be 9,86,000. Now my dear students, just a second, yeah. Now my dear students, I have just told you when I was just trying to, in the beginning of the lecture, then that whenever you're going to evaluate the borrowing and purchase option, always remember principal will be paid, interest will be paid, but interest will be shown in the P&L account, right? Interest will be shown in the P&L account. Interest is an expense. You can charge it in P&L account and save tax on it. So now I am going to compute the tax shield part. Now I will be getting tax shield on interest payment. How much interest how much tax I will save? Interest shield means in tax saved. Now 3,52,000 expense will be shown and tax rate is 50%. So if I compute 3,52,000 into 50%, how much tax I am able to save? Into 50%. So 1,76,000 rupees of tax will be saved. If interest payment was not there, then 3,52,000 profit would be there. Then on that I would be paying 50% tax. Now I am able to save the tax because my profit is reduced by this amount. Similarly, I will do for the second year and third year. I am going to solve like this: 2,72,000 into 50%. Then 1,36,000 into 50%, and this is coming out to be how much? This is coming out to be 1,36,000 and 68,000. So this is one of the biggest tax saving that we are going to do. I am the owner in this option. Owner can also show one more expenditure, depreciation, in the P&L account. So let us now first of all see what is the depreciation rate. Depreciation, about depreciation it is written, you can observe depreciation is to be charged on SLM basis. Okay, so how we are going to charge depreciation? So working note number 2. Let us compute the amount of depreciation. Depreciation itself is not any outflow, but depreciation is an expense which we can show in the P&L and save our tax. So depreciation computation, very simple. How do we compute depreciation? What is the cost of purchase less any salvage value that you don't want to depreciate in the end upon number of years? So what is the cost of purchase? 22 lakh. What is the salvage value at the end which you do not want to depreciate? So basically 22 lakh minus 10 lakh. So basically you are depreciating only 12 lakh rupees in 3 years. So basically 4 lakh rupees is your depreciation amount, and written down value at end of third year, don't forget, is your 10 lakh rupees. Because we have not depreciated full machine, we have depreciated only 12 lakh of machine. Salvage value we have subtracted. Now you will see there will be conflict in various questions. You will observe in some question they have subtracted salvage value, in some question they have not subtracted salvage value, and then you will ask me, ma'am, in this question, in the first question you told to subtract salvage value. See, if you do not subtract salvage value and you depreciate the complete machine, then WDV at the end of the third year will be 0. Written down value left is 0. If you depreciate only 12 lakh rupees of machine, then WDV at the end of third year is 10 lakh rupees. So only this difference will arise, and this difference will have an impact which will just come into the picture. You will just observe it. So just wait for some time. Here if you show salvage value, then that salvage value means that you have not depreciated that portion of asset, that will be shown as WDV at the end of third year. But if you depreciate the complete machine, complete 22 lakh, that means you have depreciated the complete machine, then there is no written down value at the end. Written down value will be 0 at the end. But in our if we do the treatment like this, then WDV at the end is 10 lakh. Okay. What impact this will create, we will just get to know in some time. So first of all, depreciation is how much? 4 lakh. Now, should I show depreciation in this computation? No, depreciation is neither the outflow, neither the inflow. Then what computation will come here? When I will show depreciation in the P&L, my profit will be reduced by 4 lakh every year. I will be able to save tax on my depreciation. So on depreciation, there is a tax shield. How much is the tax shield? On 4 lakh rupees, I will be able to save 50% of tax, that is 2 lakh rupees. So this is outflow or inflow. Now the tax shield is inflow. Tax shield is basically inflow because you are saving tax. Okay. So going back now, yes. So total of, let us compute the total of this B point, tax shield. Total of B is 1,76,000 plus 2 lakh is 3,76,000. Here it is 3,36,000 and here it is 2,68,000. So let us see what is the net cash outflow every year. Every year this is the outflow 852, 1122, 986 and this is the inflow. So what is the net cash outflow? Basically we are going to subtract A minus B. What it is going to be? 8,52,000 minus 3,76,000. This is coming out to be 4,76,000. Then 7,86,000 and then 7,18,000. Ma'am, aren't we going to show the lease rentals and all that? No, because we are not evaluating lease option. We are evaluating the borrowing option. In borrowing option and purchase of equipment, these are the outflows, and because of these outflows, these are the tax shields. Because you are the owner, you can claim the depreciation. This is the best benefit, tax shield. And now one more thing, since you are the owner, you can sell this machine at the end of the third year. There will be sales consideration, that is the inflow, that should be shown here. We will show that also here, but in a while. I'm showing the computation as per your CMA module. Okay, we can show it before also, but still I'm doing it the way they have done the question. Now this is basically the net cash outflow in the first year, second year, third year. Now we have to compare both the options, the leasing option, the borrowing option with the leasing option. Now these outflow takes place in the first year, second year, third year. We cannot do the comparison unless all the inflow outflows are at the same time period. So let us do one thing. Let us find out the present value of these outflows. How do we find present value? What have I taught you? Going back to very basics. How have I taught you the computation of present value? If present value is to be computed for each year outflows are not even, they are not same. It's not a case of annuity. Okay. Future value of cash flows are given. Now this is given and you have to ascertain this. How do you ascertain? You multiply with present value factor. And I have also told you in the whole question, the cost of capital will be taken as 8% because that is how much you want to earn on your money. So this is 8%. So we have to multiply the future cash flows with the present value factor 8%. If the future value of cash flow is for the first year, so then take the present value factor for the first year. If it is for second year future value, then take the for second year, and then we can compute the present value. So how we will do? We will multiply with the present value factor at the rate of 8%. Here we will take present value factor first year 8%, present value factor second year 8%, and present value factor third year 8%. This is given in the question. You can see in the question also it is given. These figures are given. We can even calculate on our calculator also, but it is given in the question. You can see 8% first year. This is 0.926. What does this 0.926 means? Present value factor. Factor means 1 rupee. 1 rupee present value is this. So if you invest 0.926, then only you will get 1 rupee after 1 year. If what is this 0.857? 1 rupee is present value. That is, if you want 1 rupee after 2 years, you have to invest this much. If you want 1 rupee after 3 years, this much you should invest. So I will use this figure. Yes. So these figures are 0.926, 0.857 and 0.794. So I will be able to find out the present value of cash outflows, which are 4,76,000. This is the future value of cash outflows. Any outflows, whether inflow, outflow, whatever the inflow, outflow is, you can find out the present value of cash outflow. You multiply with the present value. Basically 4,76,000's present value is 4,40,000. And this is coming out to be, if you multiply 7,86,000 multiplied with 0.857, how much you get? 6,73,602 and 5,70,092. Now this is the computation. Is the evaluation complete? This is the total present value. Let us do one thing. Let us add this total present value of cash outflow. Now since this is the present value of this figure, present value, so these all figures have come for 0 period. Now let us add this much total. Basically total is how much? 4,40,776 plus 6,70,602 plus 5,70,092. It is coming out to be 16,84,470. So basically whatever the outflows are in 3 years, that its present value is this much. Now I'll change the sheet and write on the next sheet. Now computation is to be done. Yes. So present value of cash outflow we have just computed how much? 16,84,470. Now please observe once more. As a owner of the machine, is there any other inflow or outflow? We have purchased the machine. We have borrowed the money, so we have to make the payment of principal, interest. Then we save tax because of the interest. Because of the depreciation, we can claim we are the owner, so we save tax also. So we then find out the present value. This is the total present value of the outflows. And since this machine belongs to me, I can sell it at the end of the 3rd year, terminal year. So what happens in the terminal year? Terminal year. Always look out in the question for the terminal year inflows, outflows. This is very important. You are the owner, you can sell the machine. So what is the sales consideration at end of 3rd year? 10 lakh when you sell the machine. Is there any gain or loss on the sale of machine? WDV at the end of 3rd year is 10 lakh. You have not depreciated 10 lakh. Now 10 lakh worth of machine is sold for 10 lakh only. So there is no gain or loss. So no gain or loss. Since at the end of the terminal year WDV was 10 lakh. So 10 lakh worth of machine you have sold for 10 lakh. So there is no gain or loss. But no gain or loss, good. No tax payment, no tax shield, good. But this is the sales consideration. This will come. This is the inflow. So let us consider this thing in the computation. Now let us consider sale consideration or sale of machine, we can say. So we can write cash inflow, that is sale of machine. How much is the machine sold for? 10 lakh. But this machine is sold in which year? Third year. Now we want all the inflows, outflows in the present value. So let us compute the present value of this cash inflow. Now 10 lakh rupees is the inflow in the third year. Now this is the future inflow, future value of cash inflow, right? This 10 lakh you are getting in the end of the third year. If you want to bring it, compute its present value, then multiply with present value factor of third year at the rate of 8%. Now what is the present value factor of third year? This is 0.794. So we can multiply 10 lakh with 0.794 and we are getting how much? 7,94,000. Now this is cash inflow, and you should write here less because this is cash outflow 16,84,470 and this is inflow because you have sold the machine. So what is the net present value of cash outflow? I should write net present value of cash outflow after considering all inflows, outflows. If you subtract this from this, we are getting 8,90,470 rupees under borrowing and purchase option. So if you go for borrowing and purchase option, you have various inflows, outflows in various years. We have computed all inflows, outflows, present value. The outflow present value is 16,84,000 something, and sale of machines present value is 7,94,000. So effectively your outflow is 8,90,470 rupees if you choose to go for borrowing option. Normally borrowing option has many calculations because you are the owner, you have to pay the interest, principal, then there is a tax saving on it. So there are many inflows, outflows that you have to compute in this. But when you are going to evaluate leasing option, you will see that there is no much fuzz because neither you are the owner, neither you have to sell the machine at the end of the terminal year, neither you have to claim depreciation. Only lease rentals, whatever the lease rentals that is your outflow, and whatever the tax saving on it, that is your inflow. So effectively, what is your outflow? You have to show. So first we have computed the evaluation of borrowing and purchase option. Let us go to the evaluation of, now we are going to do the computation of second alternative to, that is lease the computer. Now let us see what are the outflows, inflows, and you will see such an easy calculation it is. Year 1, year 2 and year 3. Now what are the outflows that are going to come? Outflows, every year you have to pay the lease rent of 5 lakh. So write that 5 lakh of lease renter. Whatever the outflows, please write that. Then the 10% of gross revenue you have to pay them. Now what is the gross revenue? Let us check in the question. What is the gross revenue in the question? Yes, please. 22.5 lakh. So we have to take 10% of this, 25 lakh 10% and 27.5 lakh 10% we have to take because this is the revenue, forecasted revenue. Okay, we will take that. That is also an outflow. So how much is that outflow? That is 2,25,000, 10% of 22.5 lakh. 25 lakh 10% is 2,50,000 and 27,50,000 10% is 2,75,000. Then there was a 6 lakh rupees of payment at the year end in the lease option, if you remember. So you have to remember the information in capital budgeting or leasing questions. In the lease option, you can see there was a terminal lease rental. When the contract was about to get over in the last year, you have to make a outflow. You have to make a 6 lakh rupees payment to lessor. Okay. So going back to question again. So another is lump sum payment is to be made of 6 lakh. Now no other payment is to be made anywhere else. So let us see what payment total outflow is there. Total payments are there. Now this is your 7,25,000. This is 7,50,000 and this is your 13,75,000. Is there any saving on tax? Yes. Please understand, whatever payment you make, are you listening to me? Whatever payment you are going to make to lesser, this all payment, whatever payment you make to the lesser can be shown in P&L account. So this 7,25,000, 7,50,000, 13,75,000 can be shown in P&L account as an expense. So you can save tax on it. So there is going to be tax shield on total payments. How much is the tax shield? 7,25,000 into 50%. What is the tax saving you are going to do? 3,62,500 here. Then 7,50,000 into 50%. What is going to be the tax saving? 3 lakh. Just a second. This is coming out to be 3,75,000. Then 13,75,000 you will show in your P&L and you will get how much? You will be able to save tax of 6,87,500. Now, my dear student, this is the tax saving. Tax saving is an inflow. So, what is the net outflow every year? This is the outflow, but this is the inflow. That is, you have saved the tax. So, what is the net outflow? The net outflow after computation 7,25,000 minus 3,62,500 is coming out to be 3,62,500 because this is 50%, right? What you have to understand is whatever payment you make to whatever payment you do to the lesser in the lease option is treated as an expense until and unless otherwise told in the question. Okay. So this is the net outflow. Now this outflow is taking place in the year 1, 2, 3. How can we compare with the first option? So let us find out the present value of this. To find this is the future value of cash outflows. Now we will multiply with present value factor at the rate of 8%. 8%, why ma'am 8%, why not 16%? Because for us effective cost of capital is 8%. Return they get 16% capital providers, but our effective cost after taking into consideration tax is 8%. And here also in the inflows outflows you are taking in the consideration into tax. Do one thing, you skip this tax part, then you can take 16%. Since in the inflow outflow you are considering the tax savings, tax payments, then in the cost of capital percentage also you have to take the savings part. So now you compute present value factor PVF at first year at the rate of 8%, PVF second year 8% and PVF third year 8%. So this is coming out to be what is the present value factor given in the question. For 8% it is given to us how much? It is given in the question when we multiply with 0.926, 0.857, 0.794. So what is the net present value of cash outflow? There is no inflow in lease rentals. Ma'am, what about revenue and operating cost? I am just coming to that. This is after multiplying we get 3,35,675, 3,21,375 and 5,45,875. So total present value of cash outflow is, when we add these three figures, we get 12,02,925. This is the total cash outflow. Now first of all, observe in the lease option, my dear students, in the lease option your total outflows present value is 12,02,925. That means whatever outflow you're going to do, its present worth is this much. Do you want to spend 12,02,925 or do you want to spend 8,90,470? Obviously 8,90,470. This is less outflow. So which option will you prefer? Borrowing and purchase option is preferable. So that we are going to write the conclusion. Since the present value of net cash outflow under alternative 1 is lower, the company should borrow money and purchase the computer. Now this is conclusion you have understood. Now please tell me why revenue net operating cost is not considered. Because after purchasing the machine, whether through lease or whether through borrow and purchase, the operating cost of machine, the revenue is same under both the options. So why to consider? We just have to take a decision whether we should lease out the machine, take the machine on lease, or should we borrow money and purchase the machine. So that cost, that revenue, that inflow, that outflow, which is same in both the options, is irrelevant for decision making. And we are taking decision, we are making not P&L account, we are making a decision. So we are going to write a note about it. What note we are going to write? Note: operating cost and revenue information is irrelevant in decision making, since it is same under both options. If by chance they would have written that under borrowing option revenue will be different, under lease option revenue will be different, then we have to take into consideration. But since that is same, so it will not affect our decision. Okay, so this is the answer. Please write down the answer from the beginning, write it properly. These questions are lengthy questions, so it takes time to solve them. And most important is this explanation. Cost of capital was given 16%, that is, borrowing interest rate was given 16%. But our cost of capital is not 16%, it is only 8%. So please write the given information. This is an example you should not write, you just write the computation part. Pause the screen and write it down, please. I'm changing the sheet. Pause the screen and write it down. After KD, nothing is written. Pause the screen and write it down. This is the first computation. Instead of step 1, write working note number 1. Then depreciation. So the question is, should we consider salvage value here or not? It is irrelevant, because relevant in the sense ki it is not, in different question they will consider differently. You should understand, if I am taking salvage value here, that means I am not depreciating the complete machine. That means the written down value at the end of third year will be 10 lakh. That what you should memorize. Copy it, please. Pause the screen and copy it. I am changing the sheet. Pause the screen and copy it, please. Pause the screen and copy it. This is the continuation. This was the working note 3. Pause the screen and copy it. I'm changing the sheet. Pause the screen and copy it. I'm changing the sheet. So this is all about question number 1. Now let us move on to another question, that is question number 2. Now question number 2 is different from question number 1. In the beginning of the lecture also I told you that total 9 to 10 questions are not same questions. Every question is unique in itself. Basically there are 9 to 10 cases. Okay, and now question number 2 is from the evaluation is from the angle of lessor, not from the lessee point of view. Now in the question number 1, we have compared the borrowing option. In question number 1, we have compared the borrowing option, borrowing and purchasing of equipment option with lease option. Whether we should go for lease option, become lessee, or should we borrow the equipment on our own, borrow the money and buy the equipment on our own. Now in question number 2, the evaluation is from the angle of lessor. Lessor is the one who gives the equipment on the lease. Now we are going to discuss from the angle of lessor. He has some issues. So we are going to do some evaluation from the angle of lessor, who is going to give the equipment on the lease. He is the owner of the equipment who is going to give the machine on the lease. He receives lease rental. His income, his inflow is lease rental. So question number 2 is important question. It appears to be a small question. Solution is also small, but it is an important question. So let's go to question number 2. See question number 2. Fair Finance, a leasing company means lessor, has been approached by a prospective customer intending to acquire a machine whose cash down price is 3 crores. Basically, a customer has come up to a leasing company. He wants to have a machine on lease. This machine's cash down price, that is the purchase price of this machine, is 3 crore rupees. The customer, in order to leverage his tax position, has requested a quote for 3 years lease with lease rentals at the end of each year, but in a diminishing manner such that they are in the ratio of 3:2:1. Let me read this line again. In order to leverage his tax position, has requested a quote for 3 years. Basically, customer is asking the leasing company that please tell me the lease rentals, how much lease rental should I pay? But he's doing a request. What request is doing? He has requested a quote for 3 years lease with rental payable at the end of each year. That is that he wants to pay the lease rent at the end of each year, but in diminishing manner such that they are in the ratio of 3:2:1. Every year lease rental should not be equal. It should be in the proportion of 3:2:1. That is what his request is, because he wants to take the benefit of tax position. Okay, so basically leasing company has to give a quotation how much lease rental leasing company should charge. Only one request, one condition is there. The lease rental should be in 3:2:1 proportion. Not a problem. Depreciation can be assumed to be straight line basis. Okay, and Fair Finance marginal tax rate. Fair Finance is a leasing company. So the leasing company tax rate is 35%. Target rate of return for Fair Finance on transaction is 12%. Now the target return which the leasing company wants to earn on the lease agreement, on the leasing proposition, the target return they want to earn is 12%. Okay. Calculate in lease rents to be quoted for the lease for 3 years. So how we are going to do this question? Now let us do the computation. This is the given information to us. Leasing company information is given to us. That is the lessor information is given to us. That is the tax rate of the lessor is 35% and the depreciation to be charged on the SLM basis. He wants to earn how much? 12%. He has got a request from lessee that whatever lease rentals are quoted to him for 3 years should be in the ratio of 3:2:1. So basically the machine, the equipment or the asset price is 300 lakh. Now our focus should be what the question is, what is to be ascertained? Ascertain क्या करना है? What we have to ascertain? We have to ascertain lease rentals to be quoted to lessee. How much lease rentals should be quoted? Now the solution is, what is our target? Who are we? We are lessor. Okay, we are fair finance leasing company. Our target is to earn 12% return on our investment. Now in this lease agreement, what is our investment? What is our investment? Investment for lease company. What is the investment? On that investment we want to earn 12%. First of all, lessor company, that is a fair finance company, has to purchase the asset. Now the asset is for how much rupees? 300 lakh. So first investment is 300 lakh. So let me write whatever the investment, whatever his outflows are. So first of all, his cash down price of machine is how much? Rupees in lakhs? 300 lakhs. Now this is the only outflow or there is some other outflow or inflow, because I want to know what is his net investment in this project. Fair finance company is making how much net investment? Now his investment is this much, machine price. There is no salvage value given at the end of the machine that he will get this much of sales consideration after the end of the machine life. So there is no salvage value given, there is no inflow from that aspect. But yes, the lease company is going to be the owner of the machine. So lease company can claim depreciation in P&L. And depreciation is a expense which will be charged in P&L and then we can save tax on it. So basically tax saving is the inflow that will be accruing to the leasing company. Basically I am trying to compute how much leasing company have to do the investment in order to give the machine on lease, because the target is that to earn 12% return on investment. So first of all, let us find out what is our investment, net outflow. So this is one outflow. Next is your depreciation. Let me compute. Depreciation is on 300 on SLM basis. So depreciation is how much? 300 lakh is divided in 3 years. So basically 100 lakh is your depreciation. What is the tax saving on depreciation? The tax rate is, because depreciation itself is no outflow inflow, that we know, but tax saving is an inflow. So on 100 lakh rupees, 30% tax will be saved, that is 35 lakh rupees per annum is your tax saving for 3 years, right? So now let me write here. Now this outflow is taking place in 0 period. Today outflow is in 0 period and tax saving inflow is in 3 years. So let me do one thing. Let me write the tax saving, tax shield on depreciation. First year, second year, third year, 3 years are there. How much tax saving we are able to do on depreciation? 35 lakh. Now on this 35 lakh, this is the depreciation savings for 3 years. Let me write its present value, because this is also present value outflow. So let me write the inflows also at present value. See, there are 2-3 types of presentations. One is either you write inflow, outflow, and then in the end you bring everything at the present value, or at each stage you write everything in its present value. So in this question, your book has shown everything in its present value at the very first stage. The outflow is already at the present value because a machine is going to be first of all purchased for 300 lakh. Then this saving is going to take place in 3 years. So let us find out its present value. There are two ways. Either you find present value of each year separately, but since you can observe these three values are same for every year, so you can do what? I have already told you that when future value annuity is given, every year the future value of cash inflow is same, and you want to find out the present value of it, then you multiply with present value factor or present value annuity factor. Present value annuity factor for 3 years at the rate of how much? 12%. How do you compute 12%? See, how do you do that? 1 divide by, can you see? 1 divide by 1.1 to equal to, this is the first year present value factor, which is coming out to be how much? 0.892. You press equal to again, you will get the second year figure 0.797. You press equal, you get the third year figure. Either you can do like this computation, or you could have divided, you could have added these three figures. These three figures you could have added and directly multiply 35 lakh with that figure. So we can compute that. We can either add these figures from here, or we can add on the calculator also, memory plus. How do we do? See please. 1 divided by 1.12 equal to memory plus, equal to memory plus, equal to memory plus memory recall. This is coming out to be 2.40183, which is 2.40. So if you multiply this figure with 2.40, you get how much? 35 lakh. If you multiply, you get 84.06. 84 point, just a second. 84.06. Ma'am, what are you trying to compute? I am just trying to compute. See, there are two parts. One is technical computation and one is conceptual computation. Concept is saying that there is a leasing company who wants to have a return on its investment 12%. Accordingly, it has to quote a lease rental so that the leasing company earns 12%. And the lessee company has just requested that give me a quotation in 3:2:1 ratio. Okay. Now, before computing the return of 12%, I should see how much investment is made by the fair finance company. Now, let me see what is the inflow outflow for the fair finance company. If fair finance company wants to give a machine on lease, first of all, it has to purchase that machine for 300 lakh rupees outflow. But since the fair finance company is the owner, it can claim depreciation also. So depreciation, then there will be a tax shield. So tax shield is of 35 lakh and that tax shield is for 3 years. So we can either multiply 35 lakh, we are just trying to write the present value of it. So that present value of outflow and present value of inflow we can write. So that we can subtract directly. So basically either you can multiply 35 lakh into this 2.40, whatever the figure is coming on the computer, on your calculator. If you multiply 35 lakh with 2.4018 something is coming, then you will get 84.06. So this 84.06 is what? Present value of tax shield. This is what? Present value of tax shield on depreciation. This we have computed. This is working note number 1. Now, if you observe here, this is your investment and this is your benefit on the machine. There is no salvage value, so there is no benefit from that angle. So what is the net investment you have done on your machine? If we see on the present value, on the next page I am writing net present value of investment. That is outflow. So if you subtract 84.06 from 300, you will get 215.94. So basically, fair finance company, before giving machine on lease, has to make an investment. Present value of investment is 215.94. Now, if they give this machine to anybody, they want a return of 12%. Okay. So basically, I have to compute. Now, a new question is going to come up. Now, net investment present value is 215.94. Now, you want to give this machine on lease. Fair finance company wants to give this machine on lease for 3 years. So 3 years, the inflows will come for leasing company in the form of lease rentals, inflows in form of lease rentals. Now, lease rentals for year 1, for year 2 and year 3, lease rentals will come, right? Now, the condition is that lease rental, whatever lease rental will come in year 3, it should be in this ratio, right? Assume normal lease rentals be X. Then every year lease rentals is to be in this proportion, 3x to 1x. Now this is the income. Now your target is to earn on these lease rental at the rate of 12%. Basically you want that your investment should compound at the rate of 12%, right? So basically if we discount these figures, it should come 215.94. What did I just say? You want this amount to 215.94 of your investment to compound at the rate of 12%. You want your money to earn 12%. So whatever these figures are, if I discount this figure by 12%, it should come to 215.94. Okay. Is effectively, now let me write effectively. Effectively, lease company will earn this much of inflow? Answer is no. When lease company will get these inflows in the form of lease rental, then it will be an income to leasing company. Then income will be shown in the profit and loss account. Then income will be charged to tax. So you have to pay the tax. So on these 3x, 2x, 1x inflow, you have to pay the tax. So after paying the tax, will this be the inflow? No. After tax, how much will be the inflow? So lease rentals is an income. Now you want to write, this is an income. Just a second. So let me write properly what exactly. So basically I want to write what is the after tax future inflows, that is after tax lease rentals. This I want to know. So basically this is my income, but after tax 3x is my inflow, but I will pay 35% tax. So basically I will be left only with 65%. So 1 minus 0.35. This is the presentation basically. I could have multiplied with 0.65 directly also. So basically this is my inflow, net inflow, cash inflow. So after doing the investment, I will be getting this income, but this income is tax chargeable. So after paying the tax, how much will be returned? How much net effect will be there? 3x into basically 0.65. So 3 into 0.65 is basically 1.95x. Then this is basically how much? 1.3x, and this is 0.65x. So this is basically your inflows. Now you want your investment to earn 12%. This lease rental should be this much, that they earn how much? 12%. So when you discount them, they should be equal to the present value of investment. So discounting means to finding out its present value. So let us find out its present value. How we will find out its present value? These are basically what? These are future value of net cash inflows. Now you want to find out present value. So you multiply with present value factor, right? So you multiply with present value factor. Present value factor at the rate of 12% for every year. Every year we have just computed. is too small. Just a second, please. Present value factor at the rate of 12%. Now we have just computed at the rate of 12% how much it is coming. It is coming out to be 0.892, 0.797, 0.712. So I'm writing the same figures here also. This is basically on calculator what you have to do. 1 divided by 1 plus r. So 1 plus 0.12. So 1.12. Then 1 divided by 1.12 square and 1 divided by 1.12 cube. You understand? These figures are what figures? These figures are on calculator what you have to do, that is what I have written. These figures will come 0.892, 0.97, 0.712. So if you multiply these figures with this, you will get the present value. So present value of cash inflows is coming how much? There is less space, so I am writing all these figures below. 1.95x into 1 upon 1.2. This is first year. Then second year, 1.3x into 1 upon 1.2 square. And third year, it's 0.65x into 1 upon 1.12 cube. This is present value factor, right? So how much is this coming? This is coming out to be 1.7411x and 1.0364x, and this is 0.4626x. So if you sum up, this is present value of cash inflows is coming out to be 3.2401x. Now I told you very clearly, you want your money to be compounded by 12%. So when you discount, when you find out its present value, it should be equal to 215.94. So basically you want 3.24, sorry. Basically you want 3.2401x, present value of cash inflow should be equal to 215.94. So equation is made. How equation is made? Equation is made like this. That is 3.2401x should be equal to 215.94. So x is coming out to be rupees 66.6409 lakhs. Ma'am, what have you done? I'll give you the full recap, but first you understand from here. You wanted your investments to grow at the rate of 12%, and accordingly you want to charge the lease rentals. So basically when you want this to be compounded at 12%, so when you discount this figure by 12%, it should be equal to 215.94. So when you discounted this figure, these figures, it should, this 3.2401x present value should be equal to your outflow, 215.94. So this is the lease rental X. So basically first year lease rental is 3x, right? So 3 into 66.6409 lakh. This is coming out to be 199.9227 lakhs. Then second year lease rental is going to be how much? 2x, 2 into 66.6409. So this is coming out to be 133.2818 lakhs. And third year, it is x only, which is 66.6409 into 1 only, 1x. So 66.6409. These lease rentals, if you charge. So basically what is this? This is computation of lease year-wise lease rental, year-wise lease rentals. Now this question was very easy. Let me give you a complete revision of this question. See, the question was that there was a leasing company. Please understand the types of question instead of focusing on the answer. There was a leasing company, and the question asked, the leasing company wants to earn a target rate of return of 12%. Return. Now, ma'am, don't we have to consider here after tax? No. Why? Because we are assuming here this is after tax only. Ma'am, why are you assuming here? Why we didn't assume there? Because there it was written borrowing cost is 16%. That is, interest rate is 16%. Interest rate was 16% in that question, first question. So interest we are paying at 16%, but our cost of capital is only 8%. interest going is 16%, interest we are making 16%, but effectively we are only paying 8% because we are saving tax on it. There it was very much clear. Here we are assuming, if nothing is mentioned, we assume whatever rate is given is after tax. There it was clearly mentioned interest rate is 16%. So we have to pay interest at 16%, but our cost is not 16%. Our cost effectively came out to be only 8% because we saved on tax. So this point is clear. Okay. Nothing mentioned, we assuming that this target rate of return is after tax only. Okay. Secondly, so we want after tax as our computations, we should get return of 12% after making payments of tax, and on considering tax shield, our return should be 12%. Now, what is our investment? First of all, we have to purchase, first of all, the equipment for 300 lakh. Then what, any other benefit we are going to get? Yes, we are the owner, we can claim the depreciation, so we can charge it in the P&L and our tax savings are there. Okay. Is there any salvage value given? Because that is also your inflow. So net investment, we should know now how much leasing company is finally investing in the machine. So this is the investment done in the machine. Okay. So net investment was 215.94. Now the target is to earn 12% on such 215.94. How much lease rental should be charged so that we earn 12%? And one request was done by the lessee to give him a quotation of lease rental in 3:2:1. Okay, so when we will get these lease rental, we have to pay tax on it also. So after paying tax, how much is the net cash inflow? 1.9x, 1.3x, 0.65x. Now these are in the year 1, 2, 3. So we first of all compute the present value. So basically this present value, that is we are trying to do the discounting. When we compute present value, we say we are discounting. We are wanted to compound this by 12%. So when we discount this figure, this should come to 215.94. So when we discount them, find out the present value, this should be equal to 215.94. So if x is this much, then only our return is 12%. So if x is this much, how will be the year-wise lease rentals? So this is a very simple question. I hope you have understood. If not, then you can ask me about it. And so this type of questions are there. Every question will explain you something new. Now in this question, we have studied from the lessor's point of view. We computed how much lease rental should be charged so that we earn so much. Always you will find that the point of discussion is on this. Ma'am, why have you taken it after tax, before tax? First of all, I have taken it after tax because all inflows and outflows are after tax. We have assumed it to be after tax. There in the first question, since it was mentioned interest rate, so interest we are giving 16%. So but our cost is only 8% there. Okay. Please write down the answer. Pause the screen and write it down. I'm changing the sheet. Pause the screen and write it down. I'm changing the sheet. This was one computation, depreciation computation. Basically, you have to see leasing company has to do how much net investment he has to do before giving, what is the net investment in the machine without considering the leasing option. So if you purchase the machine, outflow is the purchase cost. When you purchase the machine, you can claim depreciation also and the salvage, and in the last year you can sell the machine also. So that is your net investment in the machine without letting it for lease. Okay. But then when you consider the leasing option, then this is the whole calculation. I am removing this. Should I remove this? I should not remove this because you should understand when you want the compounding to be 12%, then discounting, after discounting this figure, this should come to equal to 215.94. Please write it down. Pause the screen and write it down. I'm changing the sheet. So this is year-wise lease rentals. Now pause the screen and write it down. Now take a break, and after break we will continue doing questions. It's an easy chapter. You will just you have to understand there are 9 to 10 questions, basically 9 to 10 cases, and almost similar questions are asked in exams also. So there are not very much varieties of questions are there. Maybe two or three more varieties you can observe in the scanner also. Otherwise this many questions are sufficient. Okay, so take a break, and after the break we will continue with more questions in the next session. So thank you for this lecture.